You paid $8,400 in taxes last year that a smarter freelancer in your exact income bracket paid zero on. Not a fancy accountant, not a tax shelter, not anything illegal. 5 deductions the IRS put directly into the tax code for people like you. Almost nobody stacks all 5 together. Stay until the end. I will show you exactly how to fix this. Not a loophole, not a gray area. Every strategy I'm about to share is published on IRS.gov right now. Here is what you will learn in the next 12 minutes. 1. The 5 deductions that stack together to erase federal income tax for a freelancer earning $60,000 to $80,000. Your income range. 2. The 1 deduction most 1099 workers are leaving on the table in 2026, worth up to $18,400 alone. 3. The 3 mistakes that cancel out your deductions even if you know about them. Real numbers. Before and after. Here's the problem. When you are a 1099 worker, the IRS withholds nothing. You get paid in full, and the tax bill arrives later. Most US freelancers do one of 2 things. They panic and overpay, or they ignore it and get hit with penalties. Neither is right. You owe self-employment tax of 15.3% on your net earnings. That covers Social Security and Medicare. Then federal income tax on top of that. A freelancer earning $70,000 gross is looking at nearly $17,000 in combined taxes before deduction. Nearly $17,000 gone. Here is what most people miss. The IRS built a system where self-employed workers get access to more deductions than employees because you absorb costs your employer would normally cover. The problem is not the tax code. The problem is nobody explains this system to freelancers. You are not supposed to pay tax on money you spent running your business. Not supposed to pay full tax on retirement contributions. And after 2025, not supposed to pay full tax on up to 23% of your entire business income. But 68% of self-employed Americans are not claiming all the deductions they legally qualify for. That is from the National Bureau of Economic Research. Every year they skip it. They write the IRS a check they were never supposed to write. Here is the part your accountant may not have told you. In July 2025, the One Big Beautiful Bill Act was signed into law. Buried inside it was the biggest tax win for freelancers in decades. The qualified business income deduction was supposed to expire at the end of 2025. A lot of freelancers were already factoring in losing it. It did not expire. Congress made it permanent and increased the rate from 20% to 23% of your qualified business income. In dollars, if you are a freelancer with $80,000 in net business income, you can now deduct $18,400 from your taxable income, on top of everything else. At a 22% tax bracket, that 1 deduction saves you over $4,000 in federal income tax. And starting in 2026, if you have at least $1,000 in qualified business income, you are guaranteed a minimum $400 deduction. Even small side hustles qualify. That is just 1 of 5. The strategy only works if all 5 are stacked together. I will show you exactly how right now. Real scenario. Freelancer. Single filer. $70,000 gross, 1099 income. 2026 tax year. We start at $70,000. Watch what happens. Step 1. Business expenses. The IRS taxes net income, not gross. Every legitimate business expense comes off the top. Laptop and equipment. Software subscriptions. Home office up to $1,500 simplified method. Business phone. Internet. Mileage at 72.5 cents per mile in 2026. Conservatively, a working freelancer has $8,000 to $12,000 in legitimate expenses. We will use $10,000. $70,000 down to $60,000. Step 2. SE tax deduction. Most people miss this one. The IRS lets you deduct half of your self-employment tax from your gross income. Schedule 1, line 15. Reduces both your income tax and your adjusted gross income. On $60,000 net SE income, your SE tax is roughly $8,478. Half of that is about $4,000 $139 off your taxable income. $60,000 down to $55,761. Step 3. Standard deduction. The standard deduction for a single filer in 2026 is $16,100. Every American gets this automatically. Nothing to do with your business. If you are paying your own health insurance, you can also deduct 100% of your premiums above the line as a self-employed individual, even without itemizing. That could be another $5,000 to $8,000. For this example, we use the standard deduction, $55,761 down to $39,761. Step 4. Solo 401k. This is the power move. In 2026, you can contribute up to $72,000 into a solo 401k, combining employee deferral and employer profit sharing. Most people are not maxing that. So let's be realistic. If you contribute $20,000 this year, which is very achievable on $70,000 income, that $20,000 comes directly off your taxable income. You are not losing it. It goes into your retirement account. You just do not pay taxes on it now. $39,661 down to $19,661. Step 5. QBI deduction. Now we apply QBI. Under the One Big Beautiful Bill Act, the QBI deduction is 20% of your qualified business income. Permanent. The precise rule: QBI is calculated on your net business income before the solo 401k reduction. On $60,000 net, 23% gives us a $13,800 deduction. We are at $5,861 in taxable income. At the 10% bracket, that is a federal income tax bill of $586. On $70,000 in gross freelance income. Add the self-employed health insurance deduction instead of standard, contribute a little more to your 401k, and that number goes to zero. This is not magic. This is the system the IRS built for self-employed workers. Business expenses first, then personal deductions applied to remaining income. Designed to work exactly this way. The reason most freelancers never get here is not the tax code. Nobody walks them through all 5 steps in the right order. Quick recap. 1. Business expenses, $10,000, down to $60,000. 2. SE tax deduction, $4,239, down to $55,761. 3. Standard deduction, $16,100, down to $39,661. 4. Solo 401k, $20,000, down to $19,161. 5. QBI deduction, 23%, down to under $6,000. Federal income tax, near zero. The IRS put every one of these in the tax code for you. You just have to use them. Now the 3 mistakes that stop most freelancers from ever reaching this number. Mistake 1. Missing the solo 401k deadline. A solo 401k must be opened by December 31st of the tax year you want to use it for. Not April. Not when you file. December 31st. Miss that deadline and you cannot claim the contribution for that year. In our example, that is $20,000 off the table. At a 22% tax rate, $4,400 in taxes you did not have to pay, gone. The fix: open the account now. Even if you fund it later, it must exist by year end. Mistake 2. Skipping QBI. Because it seems complicated, most freelancers either do not know about QBI or assume their tax software handled it. Many times it did not, because the software needs you to correctly flag your income as qualifying business income on Schedule C. If Form 8995 is blank on your return and you had self-employment income, you likely missed it entirely. At 23% on $80,000 net income, that is an $18,400 deduction. At a 22% bracket, $4,048 left on the table. The fix: check Form 8995 on your return. Blank with SE income means there is a problem. Mistake 3. No paper trail on business expenses. If you cannot document a deduction, the IRS will disallow it. Every single one. The IRS Audit Technique Guide specifically targets freelancers claiming home office and vehicle deductions without documentation. Get audited without proof, and you do not just lose the deduction. You owe back taxes, plus a 20% accuracy penalty. On $10,000 in disallowed deductions, $2,200 in back taxes, plus a $440 penalty. If the IRS considers it intentional, the penalty goes to 75%. The fix: use a separate business bank account, save every receipt digitally, log mileage every time. 3 minutes. Saves you from a nightmare. You just watched the full legal zero tax strategy for 1099 workers in 2026. Business expenses. SE tax deduction. Standard deduction. Solo 401k. QBI at 23%. 5 steps. Right order. Real numbers. If this video saves you even $500, which is the floor if you apply just one of these, subscribe right now. I drop tax strategy like this every single week. And I want to know. Scroll to the comments and tell me how much you think you overpaid the IRS last year. I read every comment. If I see a situation worth digging into, I make a video about it. Save this video. When tax season hits, you will want the step-by-step breakdown. Watch it again in Q4 when the solo 401k deadline starts getting real.